And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, and stuff like that, and also prop firm trading and making money trading with prop firms. Let's see. First thing we need to do is go over the risk disclaimer screen because I live in the United States, and this is required by law, if I'm not mistaken. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. And Henry, the Forex trading parakeet, is going to join me too. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. Forex trading is highly speculative with a high risk of losing some or all of your invested capital. Only trade with funds you can comfortably afford to lose. The CFTC risk disclosure goes like this. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, carefully consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your invested capital. So pardon me. That being said, Henry, come on. That being said, what that says is basically, if you're new to Forex, do your research, find out what's going on first before you throw your entire life savings in here and hold it and see what happens, because that's not going to work. Your account will be gone soon. And also, make sure that, just be responsible. Trade responsibly. Learn what you're doing first and then get into it. So let's see what we're going to do next. First, let's look at the DXY. Now, something very weird happened at the last half hour of trading on yesterday. Let me show you what it was. I closed out my trades at 426 because I made the decision not to carry them over the weekend. The last half hour of the trading day was actually pretty big. Look at that. Had a nice big downsized candle on the DXY. We'll get into that a little bit later. And the volume was not small either. The volume was pretty big, judging by the size of those the spread of those Bollinger Bands. So let's see what happens with that. So we're down on the DXY. It looks like we're probably going to have a comeback or reversal of sorts in the DXY, which means weaker U.S. dollar. Moving forward. Blew through the 38.2 range, which if you go the other direction with the Fibonacci levels, then that's the 61.8 number, because it's all subtracted from $1 so we could see a pullback on that. I don't think it's going to completely fill this gap soon, but on other currencies I think it will. So let's see what's going on next. We're not going to do it that way. We'll do it this way. Dollar versus the euro. I said it could go further into selling. Nope, bounced. That was not a good move on my part, but it did bounce off the Bollinger Band. We did get it closes inside. Closes outside the outer Bollinger Band, and then the next candle closes inside in the opposite direction. That's usually mean it's going to reverse. About 75% of the time, it's going to reverse. I actually have a trading program that I built that does very well with that. And I should use it more often. Come to think of it. Yes, I'm old and under the weather, but that's okay. Let's see. This is going back to here. It's probably going to reverse again. It usually does. Well, I mean, it can reverse all the way up. We'll see what happens. It's not mine to predict. It's mine to just trade what I see. Let's see. Dollar versus the yen. Big downside candle in that last one. Let's see if it did that the last half an hour. Yep. On the 30-minute chart, that's what it looked like. Gave up good 60 pips on the last candle. The last half an hour of trading. So people are dumping the dollar, or on yen strength. Well, that could be it too. But these Bollinger Bands didn't increase like that, so may not be a trend. It may just be an anomaly. Dollar versus the pound probably bounced. Yes, it did. Look at that. came down, and it's not as clear when the pound does it because it did it way back here, and then closed inside there. But that's not as good on the mean reversion strategy as I have on the euro. So I should probably use that strategy more often. But anyway, let's see what's going on here. This is got a nice big bounce on the pound versus the dollar. So the dollar is weakening a little bit, probably based on the new tariff anger strategy. Oh, that's what happened, is that they started screaming about tariffs and stuff again on the last half an hour trading when China is basically stepping back from the negotiating table on a lot of things. So they could be invading Taiwan soon. Who knows? I hope not. Pound versus the yen. This is the one that I realized I could have made some more money on if I just stayed in longer, but let's go half an hour. I did close profitably, however. That's a nice big juicy candle right there to the downside. That's again 60 pip candle. That's I would like that. Be a nice win. Have a nice 60 pip win. Have it closed. But the problem is you don't know what's going to happen Monday, and Sunday night. There's nothing you can do about it. So you're subject to the geopolitical forces that can take place over the weekend. So that's why I don't like holding over the weekend. Bless you. Thank you, Henry. Let's see. Here we have the dollar versus the CAD, and again, not so much weakening against the Canadian. Canadians just being the Canadian. It's not really going anywhere. The dollar is still very high up on it. It's right here, closed down at a psychological level, 140.05. 140 being the psychological level. So we'll see how long it holds that. We get a long stretch of dollar weakness. It could come back down to 139.40. Again, 60 pips. It's not a whole lot to talk about. Canadian versus the yen, way down. Look at that. You know why? Look at oil. Demand for oil is apparently coming down a lot. Look at that. Big oil sell-off. I guess now that since the news is probably okay. Raising tariffs on the dollar. All things this rekindles trade tensions. Oh yeah. So we have that. That the perceived media is that Trump is rekindling trade tensions, and that's what's going on with that. Me, I don't know. I don't like to talk politics out in public. Let's see. On this channel, by the way, Aussie versus the dollar. Wow, look at that. Aussie tanked big time against the dollar. So this is really going to affect the Australian market. I guess it's if we raise 100% tariffs on their biggest trade partner being China, then that's not going to work well for them. So that's sorry, guys. Don't know what's going on with that. I don't have control of that either way. Anyway, so let's see. Gold pulled back to under 4,000 here, and then took off again to 4,018. So the last candle was up a good bit, and again, it had a nice big surge that half an hour too. That last half an hour too. And then silver. So what happened with silver? Remarkably flat, but holding at $50.05 an ounce. So that is not an all-time high, but it is extremely high. It is historically a very big high for silver. We'll see how long it holds. Who knows? Maybe China and the United States will make good over the weekend, or then everything will come crashing back down again. Who knows? In the meantime, that's all I've got for today. This is Saturday. The markets are closed. Not placing any trades or anything, but I do have to go to my day job. And good thing I made some coffee. So with that, I'm going to make this a short one. You guys have a great one today. Have a great weekend, and we'll be back tomorrow to draw some new trend lines, and we'll go from there. Talk to you later. Bye.